There are currently two major factors affecting the Australian property market across the board, and that's what I want to talk about in today's video. But before I jump into it, my name is Sean Craig, and on this channel we talk about money, finance, and the real estate market here in Australia. So if that is of interest, make sure you subscribe. It would mean the world to me and makes it worthwhile producing these videos. So let's jump into it. The number one factor currently affecting the market across Australia at the moment is interest rates. And you don't have to be a genius to realise why the rising interest rates that we are seeing at the moment are playing such a big role impacting the Australian property market. Places like Sydney and Melbourne, with their high price points and their median values over $1 million, are really struggling in the face of these rising rates, as it is impacting how much it costs buyers each month to be able to pay for those properties. So obviously what impacts interest rates is what inflation is doing. Essentially, the Reserve Bank of Australia is raising interest rates to put a hold and really tighten household spending. And in doing so, by tightening spending for the average household, they're then going to slow down demand. With less demand, they're hoping that prices will stabilise. So jumping into the charts here, the Australian money supply, so this is the amount of money in the system. Essentially, on the back of 2020, with everything that went down in 2020, we essentially saw the money supply in Australia almost double in the last 2 years. And obviously, as more money is going into the economy, households have more money to spend, it's going to put upward pressure on prices, especially when we don't see the supply of services, supply of goods, supply of commodities actually increase over time. So the supply has been limited, if anything restricted over the last 2 years, but yet we've seen demand absolutely skyrocket. We saw prices of building materials, cars, boats, caravans, the cost of services all absolutely go through the roof. And this comes through in the likes of inflation. So we can see the July 2020, we actually had negative inflation for that period of time. Obviously, everyone was locked in their houses. From there, we saw inflation slowly start to rise. Around the end of last year, the start of this year, you might have heard that term transitory. So basically what the RBA was saying was that the inflation was being caused by supply issues and that things would fix itself over time. And this probably made the Reserve Bank of Australia a little bit slow to actually act and start raising interest rates to try and slow down that demand. Now we can see that the inflation's sitting at 6.1%, and the RBA's band, so what their target is for inflation to sit between 2 to 3%. Essentially, they want prices trickling up and slowly increasing over time. They don't want them at these runaway speeds that we're currently seeing at the moment. So this is where we can jump over and see that interest rates stayed steady, stayed at record lows during 2021, and that really fueled a lot of the stock market growth, a lot of the housing growth, and then we saw interest rates really start to skyrocket from there. The current forecast, though, does have interest rates starting to slow down. So it's not like we're going to see interest rates skyrocket forever. But if you are concerned about interest rates, I recently did a video comparing fixed rates to current variable rates. It's well worth a watch, so I'll tag to that one somewhere here. Check out that video tag, as it is a really interesting video. But looking at interest rates, essentially the forecast is for the rates to sit somewhere between 2 to 3% moving into 2023. So these forecasts, they are being mirrored by the banks at large, with Westpac essentially forecasting a 3.3% cash rate by February, ANZ predicting the same by November of this year, which would mean a number of 50-point increases, which we have been seeing. Commonwealth Bank's being a little bit more conservative. They think we're going to see about a 2.6 by November, and they are basically predicting that we should come to a plateau. That should be about the neutral rate in Australia, and the NAB's predicting a similar rate of around 2.85. So interest rates aren't going to go up forever, but it is one of the biggest factors currently impacting the property market here in Australia. The second big factor impacting the property market at the moment is our rental crisis. Essentially, the supply of rental properties is extremely tight and demand is at record highs. And this is really having a strong impact on weekly rents, which, depending on which side of the coin you are, if you're a tenant, this is absolutely disastrous. If you're a property investor, this certainly is presenting a very strong buying opportunity. So this is the second big factor that's affecting the property market across Australia at the moment. And there's a number of reasons for this. Obviously, at the moment, the cost of borrowing money is on the rise. And with this becomes limit on serviceability. Going back 6 months before the interest rate rises, you could borrow a lot more money than you actually can today. And that's going to limit the amount of investor activity in the market. The other big factor we're seeing at the moment is baby boomers are retiring and the baby boomers are selling off their investment properties. And we're seeing a lot of owner occupiers come in and buy these properties, and that is limiting the investment and rental pool of properties available to rent. The other big factor directly related to inflation is the fact that the cost of building a brand new home is absolutely skyrocketing, and there's a lot of uncertainty around at the moment about building new. We can see a lot of builders are going bankrupt. We're seeing it in the droves. Essentially, every day there seems to be a new article coming out about another builder that has collapsed. So this is creating a lot of uncertainty around people going out and building new investment properties, and that's obviously limiting the supply of rentals in the market as well. So what should you do with this information? We know that interest rates are going to rise considerably from here before they plateau, and we know that the rental crisis in Australia isn't going to get any better. I think it's important at this moment in time to be looking long term, thinking 4, 5, 6 years into the future, and making predictions on what the economy might be looking like at that point in time. As we know, real estate investing is a long-term investment, so think long term. But the beauty of this is right now, depending on the market you're buying in, you might be able to buy a property $50, $60, $70, or even $100,000 cheaper than you could have 6 months ago. So even though you might be paying a little bit more in interest, being able to buy that property 100 grand cheaper is obviously going to more than make up for that little bit of extra interest that you might be paying. So I think as property investors, now is a great time to be entering into the market and buying property, as we know the strong rental demand, rental prices are going up, and we know that the buyer competition in a lot of markets throughout Australia isn't that fierce. So by jumping in now, you might be able to get a property in a deal that was unimaginable just 6 months ago. As someone that doesn't own property, I think it's important to be thinking long term also. We know that the rental crisis isn't going to fix itself. We know that interest rates will plateau and quite possibly even start dropping in the next couple of years. So right now could be your buying opportunity. It could be your buying window. So if that means knuckling down and working a second job, or saving a little bit harder and working a little bit harder to get into the market sooner rather than later, be it as an investor or be it as an owner occupier, I think right now the factors lining up make it a very appealing moment in time. I'd love to know your thoughts. Where do you see the property market going? Do you think we've just started the crash and there's a long way further to go? Or do you think that once the interest rates plateau, that we're going to see buyers come back into the market in droves? It's certainly an interesting time. If you have enjoyed this video, make sure you give me a subscribe. We talk on this channel about money, finances, and the Australian property market, and I love bringing you new content. So make sure you give me a subscribe and give me a like. I look forward to talking to you soon, and have a fantastic day.